Yo, let's continue, guys. So in the video that we talked about position sizing, I introduced a concept called rebalancing, which I learned from Redalio. So let me talk about it. So rebalancing is where like you take the profits you have made after a certain duration of time, then you some of it you pay yourself. Maybe you have a separate account, or maybe you withdraw it and use it to fund your lifestyle or how you are living, to pay your bills. Then the other profit that you are left with, you divide it across the different uh, accounts, the capital, the capital that we split out. Remember I told you split out capital depending on your, if you're an aggressive trader, split more of it. If you're a conservative trader, have like you can also split out depending on what you think it's best for you. So in the term of rebalancing, I introduced that concept where if you have a what do we call it, a $10,000 account, you in span of 1 month you have made $1,000. You can take that $1,000, take maybe $300, withdraw it, pay your bills and maybe expenses here and there, take people you cherish out for, yeah, you know what you can do with your money. But the rest, the 7,000, that the $700 that you are going to be left with, now you're going to divide it into the other capital allocation. Maybe you are divided your total, the 10k, into 3 portions. So you're going to take that $700 that you have now as profit, then divide it by 3 and allocate it to the different, like, the different allocated capital. So it's called rebalancing. That's how you pay yourself. People trade to not withdraw, but for us, you are achieving two things. You're able to sustain your lifestyle, to sustain your life, and the second thing, you're growing your account balance. It will reach a point where you just, even like your profits for a whole week is like $1,000 or maybe $2,000, and that's for a week. But now I'm talking about a month. So the more you rebalance, your capital that you're working with continues to grow. So yeah, that's a concept I thought I should make you familiar with it. That's how we do it as day traders. So yeah, also to run it back, I told you about, or when the concept of also rebalancing comes about, it's advisable that in the consistency rule, I told you, every day once you execute your trades, ensure by the end of the day, if you have taken 2 trades, you have finished your trading for that day. So the next day you are coming on a new plate, on a clean like slate. Okay, so in case you have lost, and maybe you have lost like 2 consecutives, and there is no pattern, now the next pattern is forming at maybe the next day at midtime. So for me, I'm in Nairobi, so I will talk according to my time zone. So the market here aligns with, like, my time zone aligns with the market time. So at when the day is shifting over in the market, also in my time where I'm at, the day is shifting. Okay, so like it's day night, like that. So if the next setup is the next day, okay, you need to like wait till you're not supposed to sleep until you get that pair. So that's the problem with like this day trading at times, and people don't talk about it. So if your fourth pair, you have lost 3 that day, you're not going to trade. First, wait for the midnight candle to form. It usually form like 2 hours. So don't enter a trade like 2 hours before like the midnight candle and 2 hours after, because the spread will take you out in case the pair does not move according to you, or there might be a gap. Also Fridays, that's something I also forgot to tell you guys. Friday, minimize the amount of trades that you are taking. If you take like 5 trades, or if you are entering Friday, ensure you have entered your trades early in the morning. And for those that you have made a profit, be out. Like, there's no need to carry over trades over the weekend. So that's something I can also advise you, because of the Monday gap. When the week starts, there tends to be a gap. But back to the what I was talking about. So I was talking about waiting until the next day. So that next day, once you have waited for the next day, and the setup has come about maybe at midnight, okay, and now your books have closed. Now that's how I'm talking now about also like day to day trading. That's day trading. Now your books have closed, so you have made the profit for this day, and that is that. So I would advise you, if you have jumped over, the setup has come the next day, don't trade any other trade that day. That's something I can also advise you. So leave it that day, take a break, since you have spend the whole night waiting for that setup to come, go sleep. The next day, go spend time with your family and your loved ones. That's something I can tell you. The day after that, now come back now, ready to execute and make your money. So that's some stuff I wanted to pass it off. So that's part of rebalancing. So as you rebalance your books for the whole account, maybe after a month or two, it's for you to decide when you're going to be doing the rebalancing, when you think it's suitable for you to be able to balance the bills and also the account growth, because you don't want to be stagnant forever as a trader. You want to get rich. We're all here to get rich. I'm not lying to you. Nobody's here like to just be saying I'm a day trader. Anybody who is here, unless you're here to satisfy your ego and you want like to prove you're the best trader, but for us, you're here to make money. That's why I'm talking about risk. So I'll recommend you also rebalance your book at the end of your trading day. So you have understood the concept I'm talking about when I'm talking about trading day. So trading day is when you have fully closed all the trades that you opened. You have opened. You have recovered all the money you have lost on a pair. Maybe it went on a 3 consecutive losses. You have closed it. So this is the advantage of having now a low, like, risk to reward. Okay, they have high win rates, so you'll find that your consecutive losses rarely come. Like for somebody who is trading, maybe risking $1 to get 50 cents, compared to somebody who's risking $1 to get 10 cents. The guy who is like risking $1 to get 10 cents, rarely will they have to like spend even like to carry over their trading day to the next day, or wait for midnight candle to like finish closing. It's rare for them like to even have those like 3 consecutive losses, because mathematically it's impossible, like, or not impossible, but it's probability of that happening is low from the chart that you have seen. But for somebody who is risking $1 to get half a dollar, the chances of you having 3-4 consecutive losses, it's quite high. So unless you find a way that you can modify, you can be able to get consecutive like setups very fast, so that you can finish your business day early. Maybe you can decide to jump into the lower time frames, which I do not advise, because now you will have to have higher like commissions that you are paying. And also like it's quite tricky on those lower time frame when you become a day trader. So I advise you find a perfect balance for you, so that you can be able also to manage your life and sleep. So you'll make more money when you're risking $1 to make 50 cents compared to the other guy. But at the end of the day, everybody has somewhere they will like balance it out. So for the guy who is entering a dollar to make 10 cents, he'll be in the market. So the breakout will happen. 5 minutes in, he's already made his money. He's out on one pair to the other one. But for you, it might take you, maybe you have entered, it may take you for the completion of the setup, or for your take profit to be hit, it may take an average trade duration of like 40 minutes. But for somebody who is risking $1 to make 10 cents, it will take him probably maybe 5 minutes, at most 10 minutes. So those are things you must consider as yourself. Find the perfect strike. Find something that you are comfortable with and is adaptable and suitable to your lifestyle. So yeah, so that's something I should have mentioned, and I'm glad to have mentioned it. So yeah, so I think that's that for that video on rebalancing. So these concepts are quite like new, and maybe I've never heard somebody talk about them. So I'll recommend you rewatch the videos to grasp more